Hey everyone, did you catch the 5% up move, almost $2 in UOB share price yesterday on Friday, 23rd January? Did you also catch the stupendous move in the OCBC share price, almost up 4%, up almost $1 in a single day? Well, you have been following our media interviews, attend our GCP Global classes, and looking at our YouTube past videos, you'll notice that that phenomena did not come as a surprise. And this is already after the last 3 years outperformance of Singapore bank shares, DBS up 100% when we first recommended it way back in 2023. Same for OCBC, more than double since we recommended in 2023. In this week's video, I'm going to tell you why I'm dancing in the snow. Here, yes, yes, it is because you have caught on it. In this week's video, I'm going to share with you essentially why the Singapore bank shares are still continuing good investments. Two, this upcoming results in early February for the fourth quarter results. What does it tell you? Whether you should hold or take profits on your bank shares. And lastly, I'm going to share with you essentially what am I going to do with the bank shares I'm holding, particularly UOB and particularly my multi-million stake in OCBC shares.
I think we are on the cusp of a new renaissance. It's not even a revolution because it represents a new beginning. Family offices bringing something like in the tune of $400 million. So where this money actually finally sits will then drive the various pockets of underperformance in real estate. Like any renaissance, it comes with a boom, but at the end, where it finally ends and how long it will last would be you and my best guess. But one thing for sure is that this trend that has been put in place, the dynamism is very much in place that will drive Singapore. So Singapore is going to be more costly to live. Unfortunately, it's all driven by this huge new money.
That was my Channel News Asia interview 2 years ago in 2023. Since then, the bank shares UOB, OCBC, and DBS have doubled. Now, back in that interview, I've mentioned that structurally, why I was so convinced that Singapore bank shares would rise and will continue to rise is the fact that structurally there are big changes. I'm a fan of Stanley Druckenmiller, the right-hand man of George Soros, who way back in 1992 broke the Bank of England and made the first $1 billion. Now, one of the key things I learned is to understand this key thing. Earnings drive share prices. But for share prices to go crazy, it is liquidity. So yes, ladies and gentlemen, as I said in my Channel News Asia interview, it is clear that Singapore is a bust with a huge boom. That is fresh flow of capital from family offices setting up from the US, India, and China. And yes, in GCP Global, because we actually teach for the best in this region, many of them gravitated and attended our classes, and we can feel the pulse, we can feel the momentum, and that's why we shared that in our Channel News Asia interview 2 years ago. Henceforth, you can see that all the bank prices have more than doubled. And my dear ladies and gentlemen, as you come through our lectures and you come through our past YouTube interviews, you notice that we have continually played down, questions that came out as, for example, Straits Time asked in this article, DBS, OCBC shares hitting new highs. Are they still a buy? So along the way, on the way up in creating wealth, there will always be 1,001 questions as to whether it's time to sell and take your profit. But if you are a true value, understanding the structural move, that actually underpinned new capital flow, you keep on holding to these investments. And many a times in our lectures, in our classes, we have pointed out this particular chart, which is key in understanding transformational economics, transformational liquidity flows that will impact banks. Because back then, in 2 years ago, we have shared that if you enter the Singapore market and the huge flows of fund, the only natural way was to gravitate towards banks because at the time, 2023, interest rates were still on the way up. So real estate investment trusts definitely should not be in your portfolio. And true enough, to real estate investment trusts for the last 2 years until 2025 didn't perform. Now look at this chart, ladies and gentlemen, which I've shared with many of my in many of my lectures, for high net worth individuals, index funds of REIT managers, as well as family offices. Now look at the green, or rather the pink portion. You notice that every time the 3-month T-bill, as represented by the black line, falls, the blue line, that's a global bank index, actually fell, meaning that bank prices normally fell, and it happened in the late 80s. It happened again during the European crisis in 2020, right up to 2022. And again, the next pink portion was in 20, just before the global financial crisis in 2008. But this time round, this forwards, this time is different. Really hits, the head of the nail. And in this case, I've seen and shown you in my lectures, that the purple now stated clearly that now even as the 3-month T-bill falls, you can see that bank prices are only going up and in fact surging, as you saw yesterday on Friday, 23rd of January. And you've been following us in our media interviews, you've been following us in our lectures, you've been following us in our YouTube videos. You notice this doesn't come as a surprise for you because it's clear that the gravitational pull towards bank prices is no longer looking at banks in terms of valuations, but looking at banks as number one, excess capital based on the CTI surplus that they actually have. And two, banks are in an enviable position to be paying higher dividend yield to investors. That has been the crux in our underlying argument for the last 2 years, and that's why bank prices have surged. And you have followed us, yes, you'll be dancing in the snow just like me. So what to expect in this upcoming banks results, for which the banks will report fourth quarter 2025 numbers? Well, as per usual, if you've been following our YouTubes and our lectures, we've been telling you that this year will be a lackadaisical performance for the banks. But this does not mean that the share prices will be none other than lackadaisical. As usual, this is my personal sharing, my own analysis. It is not a stock recommendation or bank recommendation, and I do not profess to be telling you that you should be buying banks, but this is just my personal opinion on my own holdings and what I've been guiding GCP global investors in the last 2 to 3 years when we have seen bank prices move up. So let's get on with the results. First, do not expect fantastic results. As I said, it will be lackadaisical because one, if we look at the key thing, that is the quarterly net interest margin, or for short, NIM, continuing to expect to a drop. For DBS Bank, the year-on-year change in the last quarter set of results, 15 basis points. OCBC, 34 basis points. UOB, 23 basis points. Do expect this to continue to drop because simply the SORA has fallen now to 1.2, 1.3% compared to a year ago. Do not expect it. Therefore, profit margins for the banks to continue to go up. In fact, if you do a dial down to the comparison of all the three banks based on the third quarter set of results that was detailed, you can see that the net interest income of DBS Bank was down 1%, OCBC down 9%, UOB down 8%. So go and understand that in terms of net interest income, banks are not benefiting. And that's per usual because when banks' interest rates are on the coops, and therefore, when you translate down to the net profit, that's the bottom line, you can expect the net profit for DBS to have dropped 2% in the third quarter of last year, OCBC well, flat, as well as UOB down the worst 72% because of that special provisions. But as I said previously, ladies and gentlemen, banks is about understanding structural changes, understanding liquidity flows that whack and hammered into the banks, and that translate into the share prices. And what are these? Well, look no further, because in our last video, when I've again told you that I was buying banks way back, when the market fell because of Liberation Day, rather, in late March, April of last year. I've told you that I've bought 3 million worth of additional shares, principally in the bank shares, and I've shared with you in my classes as well as in my YouTube videos. So you can see, ladies and gentlemen, we are the kind that actually put money to where our mouth is. So we don't talk uh, unnecessarily, but we put into action what we tell you. That's our personal conviction, and that's how we make big money. So if you reckon you want to join us on this bandwagon, do sign up on our next class on 7th of February, for which we will be talking about Singapore banks, technology stocks, as usual, going through all the key companies that report results, particularly on AI and real estate investment trusts, and see where is the next transformational changes happening. So back he want ratio continue to strengthen. Henceforth, they have grown to a fully phased in at 15.1% for DBS, 15% for OCBC, and 14.5% for UOB. Now, the implications for investors that I've shared previously is this, okay, that there is excess capital on top of the current capital return plan that all the three banks have actually detailed for you, either via share buyback or higher dividend rate. In previous videos, I've advocated that it doesn't really make sense to be buying bank shares back unless there was a big drop in the prices, as what you saw during Liberation Day of last year. But this means, therefore, that you can expect a higher dividend yield. And true enough, if we look at DBS, the management have guided for 8 billion excess capital. I hope it will be via higher dividend rate or special dividend. For OCBC, there's an excess of 2 to 2.5 billion. But unfortunately for UOB, maybe not, until and unless in this upcoming results they guided that they have provided sufficiently for the loans that possibly haven't been so strong, what they did in the Middle East, as well as what they have actually experienced for property developers in China. Hopefully we get a clear idea of that going ahead, that will then could have set the floor on UOB prices. Looking at UOB prices, if you do notice our past videos, I did mention to you, as well as those who attended our classes, that when we Cho Yap, or rather his son, Wee Ee Chong, bought back UOB shares at 33.64 and 33.45, if I remember correctly, I also went in at the same time. And true enough, just in less than 3 months, UOB share prices have surged a wonderful 30% on top, or rather 20% on top of the 5% that we saw in a single day yesterday. So, ladies and gentlemen, if you want to make big money, you got to be very attentive to such details, because CEOs like Wee Chong buy, not because they love the bank wholeheartedly. I'm sure he does. I'm sure he does his work well, but essentially, CEO buying, especially if it's a big purchase of shares, are indication of the confidence of the turnaround in the earnings or the operation of the banks. Well, that's left to be seen. But more importantly, the share prices have reflected that, and kudos for those who have attended our classes, because this is exactly what we share with our GCP global investors. So the last part of the video, what do I do in my bank shares now? Well, guess what? I'm still holding on to them. Take for example, my OCBC shares. Yes, I have 77,000 shares. If you take the closing as of 21.34 yesterday, well, it's more than coming close to $2 million. I've lost count on profits I've made on DBS, UOB, as well as OCBC. So Essentially, as long as there's a transformational, the boom that I talked to you about, that is being experienced, well, don't spend your time actually looking at secondary questions just because the shares have gone up that much. Whether real estate investment trusts are better buys. Of course, real estate investment trusts are actually have underperformed for 2 years. It is time, maybe with interest rates dropping, to be outperforming. But if they are winners, how and when to keep it and when to actually sell. It's the key thing that you want to multiply your wealth. So once again, I hope you enjoyed this week's video. Thanks for watching us. And if you want more of that, please come and join us for our class on 7th of February, where the early bird special prize is still being extended to you.
Renaissance, it comes with a boom, but at the end, where it finally ends and how long it will last would be you and my best guess. But one thing for sure is that this trend that has been put in place, the dynamism is very much in place.